Hey, welcome to the live stream. It is July 3rd, the day before Independence Day here in the United States, the day 4th of July that we get as a holiday, get to barbecue, spend time with family, uh, friends, have a good time. And with me is Daryl. He is a YouTuber and he brings a lot of knowledge and I think skills around technical analysis of stocks. And how you doing today, Daryl?
I'm doing really well. Thank you for
Thank you.
having me.
Yeah, you're welcome. It's a treat to have you. And this is kind of a last minute live stream, everybody. I'm tell you a funny story. I was supposed to travel from Texas to Southern California yesterday, and Mother Nature decided to influence that arrangement. And I'm physically in Phoenix, Arizona as we speak, waiting for my flight that's going to leave in roughly about 3 hours. And then I'll get home and I'll be with my family, and that'll be great. But
Yeah,
I
that was
thought,
my
hey, let
home
me,
for about 30 years.
Phoenix.
Yep, I lived just outside of Phoenix.
Yeah, what was unusual, it's unusual to me because I always think of Phoenix as, dry and warm and hot. But we landed and it had poured rain. And it's like, whoa, didn't expect that. But uh, I guess they had a monsoon or something and it poured rain. But today it's blue skies, nice and warm. I was outside earlier. It was really nice. So go Phoenix. So it looks like Saeed's on the stream. Saeed, this is a call where we have very little agenda. So Saeed, if there's a stock you'd like this to take a look at, you're going to get double the coverage on your stocks. I'm going to go fundamental analysis, talk about a stock fundamentally, and then Daryl is going to come in with his technical review of a stock. We had a couple of stocks we could work on as people, kind of get their thoughts around stocks you want to look at. Just a couple of things on the live stream. This channel, there's a lot of paid members, and I really appreciate their support. Helps cover the cost of software and all kinds of stuff. And I respect that and provide uh, ticker evaluations on this stream to members for no additional fee. They already pay a membership. It's not a lot. It's $10, $25, or $100, depending on what you'd like from the channel. And if you're not a member, don't want to be a member, that's cool. I really appreciate you joining. If you'd like us to review a ticker, if you like what you're seeing and you're like, hey, I'd like you to review XYZ ticker, we'd be happy to do so. It's a $5 super chat, and then we could take a look at it. So Nicolas Para, awesome to see you. Cool thumbnail, by the way, big lion. So on Elevance, I am going to have some comments later around, I guess, Elevance, but I'm going to talk about Oscar and United Healthcare. So stick around for that. The short answer is I'm buying into the space, but I think it's a bigger, longer answer about what stocks I'm buying. And then UK Dave 69. Good to see you from the UK. Awesome. And we are going to celebrate Independence Day tomorrow. And another fun fact is Canada celebrates their Independence Day on July 1st. They refer to it as Canada Day. We refer to it as Independence Day, 4th of July. And when I was a kid, geez, it was not a good idea, but we used to light fireworks. Everybody loved doing that. But now we don't like that so much because houses burn down. It's just a direct correlation. So where I live, that's a really undesirable, frowned upon situation. And I think that's the case with most regions of the United States now. So we just, enjoy good food and the company of our family and friends. So just a quick, kind of lap around the stock market. This stock market just wants to go up. It just wants to have a good time. It'll pay for the bill later. It's kind of on vacation. And the last 5 days, the S&P is up 1.85. Year to date, it's up 6.8. And the reason I say it just wants to go up is if you really look at where we were April 8th to where we are now, the S&P from the low is up 26%. So it is going up and to the right. And now that it broke through an all-time high, I don't know when it's going to stop. It's not going to go up forever, but does this thing have another week, another month, another 2 months, another 5 months? I don't know, but my guess is we're going to have it go up until we run into a substantial news item like, something. I don't know what to fill in the blank with. Daryl, your thoughts on what this market's doing and how long you think this party is going to last?
July is one of the strongest months from a seasonality perspective. And then August and September tend to be our weakest. So I'm expecting we're going to continue to rise through the month of July. We may have some choppiness, but I'm looking at the chart right now, and I mean, we just keep accelerating above the last resistance point that we had. We're still moving higher. I guess we had a couple of down days, but I'm looking at 2 out of 6. The last 6 days, only 2 have been down. So things are definitely looking really good right now. We are in an overbought condition, and that can work itself off just by time, or you have some kind of a pullback. So just because we're overbought doesn't mean we're necessarily going down. It could go sideways for a while until that overbought condition resolves itself.
Yeah, let's talk about that. So overbought doesn't mean it's going to come down soon, because I actually observe the type of investor I am is I like to buy when everybody's scared. Like this is when on April 8th, that's when it's like Christmas. Like, oh, you're going to sell me Meta at that price? You're going to sell me Robinhood at that price? Huh. Presents all day long, and I'm buying. And then when we have a condition right now where we're overbought, a different phenomena happens, which is fear of missing out. The retail investor, as well as a lot of, I would say, institutional professional investors, they don't want to explain to their investors, why weren't you in Robinhood? Why weren't you in, fill in the blank? So they buy that stock. So that way they could say, no, I'm in the top performing stocks. I'm in NVIDIA. I'm not a dummy, even though they're buying at pretty much at near the high. So I see that kind of, once we get into an overbought zone, there's a lot of behavior that pushes it even higher until we get substantial news and something forces it to kind of start going down. And it could be like unemployment. We get an unemployment report that says, and I'm just making stuff up at this point. The unemployment report we got today, I thought was fairly positive, but something substantial can push the market to the downside. And then a lot of people start reconciling, well, I'm going to go ahead and take my profit on this stock, and this stock because they're so overpriced right now. What do you think?
That could definitely happen as well. People start taking their profits.
Yeah,
we did have the 50 cross over the 200 day on the SPX yesterday.
Mm-hmm. What does that tell you?
Nothing really, other than we are definitely back in an upswing, because we had the death cross on April the 13th or so, and now it's crossed above the 200 days, so that confirms that we're definitely back in an uptrend at the moment.
Yeah. So for me, like individually, what am I trying to do, right now is I'm trying to figure out how can I keep the performance going for the second half. And a little bit of it is, I need to create a little bit of capital. And rather than selling my stocks at a real high rate, there is a couple of stocks and I'm selling off, dollar cost averaging out of those positions. But I'm also selling some bonds. I have 3 bond ETFs, and I'm selling those on good days to sell and creating the capital that I need from those bonds. And I should have enough capital for the rest of 2025. I have found a couple of stocks that look interesting. One of them, I got to thank the live stream, is earlier this week. We found I think a nice gem, an XP, and I started buying into that yesterday. But that's an example of, wow, that's a good looking stock, and the story looks good on it. It reminds me of Robinhood, except it's down in Brazil. Now, I'm not jumping in head first, but I'm got a small position going. I'm going to keep looking at it, and maybe that receives a lot of capital, as well as other stocks that I think are good buys. One of those stocks is Citi, and I did a video. I released it on the channel. I think Citi is kind of a fairly obvious winner for the back half of the year. The banking regulations are becoming less expensive, less intrusive for banks. They had a lot of regulation coming out of the big financial crisis that we had in 2008, but that's really beginning to go away. And the banks had kind of like their health check, their stress test last week. They all passed. They were all like fine. And I think the stresses are going to get lower. It's going to make them more profitable. And Citi, over the 5-day, looks good. Year to date looks good. 1 year looks good. Pays a dividend. It's like, man, you can have your cake and eat it too. And fundamentally, Citi is a solid stock. I value banks based on book value, and it's the primary differentiator between the banks that I cover. And overall, I think the stock is discounted by 28%. The book value is very good. It has the best price to book value in the market. Let me make this a little bigger so you guys could see my screen better. So it has the best book value of big banks, 0.85 versus, I used to be a JP Morgan stockholder. It's at 255. So I feel like I'm getting good value out of Citi. It could keep going up, has a good PE ratio, and Citi is kind of a, very clear, hey, this stock can really keep going up. There's nothing that should get in its way. The employment report is one more positive element to this stock. Like, hey, if people have jobs, they're going to have Citi accounts, they're going to have Citi credit cards, they're going to get Citi's financial services, they're going to buy houses and get a mortgage from Citi. All those things are going to be there. And this bank has been growing their top line revenue. So from a fundamental perspective, I think it's a good stock. And I already own a pretty good position of it. I own like $70,000 of Citi, and I'm going to start buying Citi if it cooperates, because I hate buying when it's up like 2.28% on a day. I'm going to pick days when it has pullbacks. So and I don't know if you want to share your screen, Daryl, but I'd love to get your review of Citi from a technical perspective. And I'll give you a minute to share your screen. I'll show a couple of things on Citi. When I look at Citi and look at what other analysts are thinking, 14% is, 14 analysts cover it. And I really like the growth that they are showing, that the company is going to grow revenues a lot this year. They grow by 19%. and they start putting up earnings reports like this stock's going to really roar. So let me turn the screen over to Daryl, and he could kind of take us through his analysis of Citi. And you are live.
Before I do that, while you were speaking, I looked at the XLF, which is the financial sector, and it is supporting what you're saying for the banks. It hit an all-time high a couple days ago, and look what it's doing today. It's up another 1.2% today. So that looks good for financial support. And if we take a look at Citi just at a first glance, it is definitely increasing from consolidation here over a week or so. And then it's been steadily rising. It is in an overbought condition. So the RSI is sitting above 70. One of the good things that I'm seeing here, let me draw a line from, let me get on my right hotkeys here, is we were having a negative convergence on this one, but it looks like that has resolved itself. So now you're getting a momentum breakthrough, basically, where it's reached a level where it was sitting back in May 16th. So that looks really good and positive. Then one other thing that I see here is we've been in steady accumulation for months. Let me see where this is, the beginning of 25. So if I put that back where it was, and then look what's happening here the last week or so. I mean, somebody is accumulating this big time right now. Maybe you.
Great. Yeah, right. I appreciate appreciate the thought, but yeah, I'm not moving anything. What's the RSI on Citi?
It's sitting at 84, so it is definitely overbought.
Hoo-hoo. Now, here's what could happen is I showed that analysts are thinking, and this is 14 analysts, more than 14, more like 24. Zach, great to see you from the Netherlands. Awesome to see you. We're back to Citi. The fundamentals can continue to improve for Citi. They're good right now. This is a big bank. This is kind of a, what kind of investor would I think really like Citi is investors like you and I. We're a little older, and we're like, wouldn't mind having a stock that's going to go up nicely. 25% rate of return is awesome. You can pay me a dividend too. Where can I sign up? Thank you very much. Now, the growth in revenue, if they do hit that 19% growth, the valuation is just going to get more valuable. It's just going to be, hey, more profit, book value is going to expand, all those things. So my valuation is going to get larger, and I might see a bigger discount after their earnings come out July 15th, which is in a week and a half. So it's overbought, but maybe other people are thinking what I'm thinking, which is, hey, the conditions are setting up so Citi is going to have an expansion phase. Like their business is just becoming bigger profit, bigger book value. And I think that locomotive is beginning to build up momentum, and it's going to be hard to stop.
Well, if we look at it in comparison over the last year, C is outperforming the SPX by 24.31%. That's very positive. It's outperforming its sector by 9.36%. It's outperforming its industry group by 6.96%. and the industry group is outperforming the SPX by 16%. So these are all really good from a momentum perspective on Citi.
Excellent. Very good to hear. So Citi is one of those stocks that I'm thinking is going to help me perform in the second half of 2025. Now let's turn our attention to a different stock. We're going to talk about, and maybe you can, and I don't know if you're ready for it, so if you need a minute to get it ready, that's fine. We're going to talk about Qualcomm. And Qualcomm is a semiconductor company, and I'll kind of give everybody just a quick introduction to Qualcomm while you ready your graphs. Qualcomm's a semiconductor company that made a lot of its name on communications. They started in defense. They're down in San Diego. So you guys know San Diego has a huge military complex, Navy, and as well as the Marines. The Marines are have Camp Pendleton just north of San Diego. So big military town. And when they started, they were making a lot of communication that went into commercial, but a lot of applications for military. They took over kind of the mobile phone market. Their mobile phone chips are awesome. Smartphone chips are awesome. So nowadays, everything is about data center. So investors have kind of disregarded Qualcomm, like, oh, Qualcomm, not as exciting as NVIDIA, not as exciting as Broadcom. And I can understand the sentiment. Hey, it's the data center's booming. But boy, they really left Qualcomm off to the side, and Qualcomm keeps growing, generating profit, cash flow, all the things that I want, which is you're going to deliver cash flow and grow your top line revenue and be a really well-run business. Give me a PE that's really reasonable. I'll snatch up shares. So I've been doing that. Now that's an introduction to Qualcomm. We'll start with technicals, and then I'll come back with my fundamental analysis. So go ahead, Daryl. Tell us about Qualcomm, what you're seeing on the technicals.
Okay. So it's trading above all of its major averages, the 20-day, the 50-day, and the 200-day. Looks like the 200-day is getting ready to cross over if it hasn't already. So the 20 sitting at 156.27, and the let's see, that's the 200, 157. So it's almost getting ready to cross over. So your shorter term average, the 20-day, is definitely moving up and is probably going to cross over the 200 here shortly. The markets are going to close in 6 minutes. The RSI is not quite overbought. You're sitting at, excuse me, 67. So we're in good shape there. The PPO is getting ready to break above its high back on the 13th or 12th or 13th. So that's good positive momentum. Accumulation looks a little flat, did decrease a bit in early June, mid-June. It's traded sideways since then, but is turning up at the moment. The negative flow, the money flow is somewhat negative at this point, but does look like it's improving over the last couple of weeks. Qualcomm is underperforming the SPY. It's underperforming the XLK, and you already talked about that, and these charts somewhat prove that. It's underperforming its industry, and that's actually been getting worse since about the middle of April. While the semiconductor industry has actually been outperforming, at least let's see, probably since about the 4th of June, it's been outperforming. So that's what Qualcomm looks like at the moment.
Yeah, so it sounds like, what I'm seeing from a business perspective is showing up in the technicals. Let me go through my valuation of Qualcomm, and I'll look at like their growth rates and so forth. So to begin with, I think Qualcomm is discounted by 44%. The reason for it is their cash flows are just so darn good. They just produce cash flows. They don't produce super semiconductor chips. They produce cash. At least I think of them that way. And they're just growing that cash. They're growing their top line revenues, I'll show. So this cash flow will not go unnoticed in the long term. Over the long haul, stocks are a weighing machine, or the market is a weighing machine, and it'll weigh those cash flows. Based on the cash flows that I think they're going to produce, and using an 8% discount rate, I think the intrinsic value of the company based on cash flows is $357 billion, but their market cap's 180. So you're seeing a very attractive discount on Qualcomm. So I'm buying Qualcomm. The earnings per share is also very good. You're buying at a very reasonable PE. You're not having to buy a really unreasonable PE like Broadcom. I made money on Broadcom. I'm very familiar with Broadcom. I've made money on Broadcom on 2 occasions. More recently, I sold in 2024. The stocks continue to fly up, which is good for investors that stuck around. So I like semiconductor. I make money in semiconductor. But this one here is, I own 2 semiconductor stocks, Qualcomm and Astera Labs. Astera Labs is my rock star stock. It could fly up 50% and then drop 30%. And Qualcomm, I think, is going to be worth 50% more over the next 2 years. And it could do better than that. And it pays a dividend. So when we look at Qualcomm, the 5-day, I think as you noted, when we look at the sell-off we saw going into April, I mean, everybody kind of took their medicine. But since then, I see a nice upward trajectory. You know what? I like that. And it has some pullback, so I can load up on some stock. Year-to-date's a 5% gainer. You have a 2% dividend, 2.19. Now, that's not keeping up with NVIDIA and Broadcom. Those guys are up there probably near 20% rate of return for the year-to-date. And but this one here is, again, if you're an investor that wants a stock that's going to be a little more steady, kind of long-term appreciator, you're buying into value, this guy's a lot like Citi. We look at the revenue growth. The revenue growth is there, 16%, trailing 12 months. This is a big number, 42 billion. They're not like growing a $4 billion company. No, 16% growth on 40 billion is roughly $6 billion of revenue. That's really, really chunky. And when you look at the rate of free cash flow, $11.7 billion. And you see how over time, this company's proving that, hey, what we make, the world demands, and it's not going away. And we've been making it for a long time. We have military customers. We have commercial customers. We're not going to give up our cell phones. We're going to, as people renew their cell phones, they're going to use Qualcomm chips. And they're beginning to use that Snapdragon chip in computers, competing against Intel. So that's a new revenue stream. Now, they produce fabulous cash flow. That cash flow is like textbook. You want to see that. Look at these profit margins, 26%. If I went to the bank and said, Victor, we're going to pay you 26%, I would say, I'm going to come back with a truckload of money because I want to earn 26%. Well, these guys are making 26%. So everything I see in Qualcomm is like, wow, this is a good company. So I want to be a part of it. Analysts, 26 of them, plenty of opinions. They think it's discounted. And the worst case scenario is $140 price target. Not too bad. The risk isn't really bad. But some analysts I'm probably closer to the 225 price target. It could really go up nicely. And kind of like Citi, reward me in appreciation and give me some income. I get to have my cake and eat it too. Now, their fiscal year ends September 30th, 2025. So we're coming up on it because we're already in July. So we're a couple months away from September 30th. You can see the revenue growth is there, and then they're going to flatten out next couple of years. But the revenue growth is really, really good. Earnings per share is expanding. Look at that, 33%. So these numbers are really, really good, all positive. So PE, 13.5 this year, 13.3, 13.09. So all these factors here, this is another nice value stock, looks good. Balance sheet's solid, more cash on the balance sheet than debt. This one here is another stock that I think, you know what, the market's going to start weighing those cash flows at some point, and it's going to keep this chart going up higher. This is the type of stock that I'm good staying in for a while because they keep operating their business and showing that, hey, we know what we're doing. We're going to keep growing the business, and they're not in the limelight of the data center like NVIDIA and Broadcom to a lesser extent. But that's fine. At some point, we're going to pivot back to that smartphone market, the PC market, because the data center, that trade has been on for a 2.5 year, timeline. And at some point, those valuations are going to begin to collapse under their own weight, in my opinion. So this one here is second stock. It's looking good, and I'm buying into Qualcomm. I exchanged a couple of messages earlier on the Discord with another investor. He was in the same boat, so we agree on Qualcomm. All right, before we move to the next stock, let me just remind everybody, we're 28 strong on the live stream. Thanks so much for tuning in. A couple of things. First, Daryl has a YouTube channel, and if you could, and at some point we're going to show you the page, but please like his videos, become a subscriber, support him because he brings a lot of value. And I've been on YouTube for 10 years listening to investors. I've been on YouTube creating videos for 4 years now, and it was part of it is the engagement with other investors. But a lot of my investing, I can tell you, I've benefited for the last 10 years from seeing people like Daryl do their analysis. And I don't invest the way Daryl does per se exactly, but what he shares brings a lot of value and gives me a different lens that I typically don't look through, and it helps me make more money. So please support his channel. Second thing, on this live stream, we want to look at tickers that you want to look at. So if you're a member, please put stock tickers that you want us to go through. We just showed you 2 examples of how deep we're going to get into a company. So put them out there. If you're not a member, a $5 super chat, and that'll get your ticker reviewed. We'd be happy to do it, and let us know. We'll monitor the chat and see what people want to talk about. But if there's no request, we're going to move on to ServiceNow. And the market has closed, right?
Yes, 5 minutes ago.
All right. So ServiceNow was up 3.46. Now, this stock isn't flourishing this year, not yet. It really had a pullback, really a pretty hard one, 38%. Now, this one here is a company that operates in an industry that I have a lot of expertise in. I've known the enterprise software space for 30 years, and ServiceNow, I know exactly what they do. And they compete against Salesforce, which also provides service software. ServiceNow provides service software, IT help desk software, and so forth. Now, their CEO, McDermott, his original occupation, he was a sales professional, and he was very good. And then he He's always been a salesperson. So keep that in mind, because he knew he needed to anchor or attach his company to AI. So they claim that, oh, you can get AI agents from ServiceNow, and they could basically do the job of a person when a customer calls in for service. Now, I think we've all had experiences with self-service, AI or self-service kind of prompts, and they're not the greatest. Oftentimes, it's a waste of time. You waste 5, 10, 15 minutes, and this agent really doesn't give you what you need, and then you have to talk to a human being. So it's a little frustrating for customers. And I don't know that we've innovated past that. I think agents keep getting better. I think it keeps getting better. I acknowledge that. But these guys, I think, oversold that concept. And it shows up because I think at a certain point, the investing community matched what I think is the business community, acknowledging that, yeah, ServiceNow is not really killing it. It's doing well. It's doing really well, but it's not killing it. All right, so these guys, and before I move off of that, looking at the 5-year, the stock has done really well, 150%. But when they started to really, beat on that AI drum, this stock was an AI darling, up 206%. But they kind of collapsed under their own weight. Pullback was 30%, actually more than that, 35%. So that's what happened. The stock price got too high. These guys are $218 billion market cap. That's a pretty good market cap considering their revenue is $11.47 billion. So you're paying about 20 times revenue for the company. It's a little expensive. PE 142. We just looked at Qualcomm and it was 16. So it's like, whoa, 142. You guys better be growing, big time. And then forward P 61. Analysts think it's fairly priced, but it's a strong buy. Got to buy it, which is funny. Strong buy to me means it's discounted by 50%. Now they are growing really nice, 21%, but it's a smaller number. If you look at Salesforce is like 4 times bigger. And these guys are growing at 21%, which is a good growth rate. And again, Qualcomm was growing at 16%. So these guys are growing at 21%. Qualcomm is $44 billion in revenue. That's an example. Now, software companies, one of the big desirable elements of software companies is they have these gross margin numbers that look terrific, 79% gross margin. That's why the software business is so darn attractive, desirable, profitable, is that they don't have to write the software every single time they have a new customer. They just tell the customer, go download it, you have your license access, and you're good to go. They make lots of money. And their profits are good. Free cash flow is very good. Free cash flow is growing nicely, 3.6 billion. Now, when I value ServiceNow, and I think I have a valuation for them, or if not, I'll do it on the fly. I don't quite get to their stock price, but let's take a look at what analysts are saying about the stock. 32 of them are all over ServiceNow. Some of them are real bulls. Some of them are like, this stock's too expensive. I mean, there is a wide dispersion on opinions on ServiceNow. Now, over time, somebody's going to be right. Right now, is it going to go up or down? Now, their revenue is expanding. It's supposed to continue to expand. That looks really good. And their earnings per share will also expand. It's expanding a lot this year. So that looks really good. And it's going to bring down that earnings per share. Now, if they have any problem growing, this stock's going to really go down. It is going to torture investors because if they go to 10% growth rate and they're still a relatively small company compared to Salesforce and SAP and other software giants, the market's not going to treat them as a growth stock. They're going to be like, oh, well, you're just like a software company. Well, your PEs are too high. Your valuation is way too expensive. So let's take a look at, I think I have ServiceNow. If not, we will create it. Here we go. Not Snowflake. There we go. So here is the valuation on ServiceNow. Now, I like their cash flows. I think they're going to keep growing. No problem. So I have a cash flow forecast. Okay. This is pretty meaty cash flow. But as I showed you, Qualcomm's like 12 billion in free cash. These guys are 4. Okay. So the intrinsic value of this company is 154 billion, which is the net present value of the future cash flows I expect from this company. These numbers I'm getting from their financials. These growth rates I'm getting as a consensus growth rate, and I'm actually being quite optimistic about the growth rate because you saw that they're going to grow about 20%, maybe 19. So based on those factors, the value of the cash flow is 154 billion. Add cash, take away debt. So I have an intrinsic equity value of 158 billion, but the market cap of the company is 216. And keep in mind, Qualcomm has 12 billion in free cash flows, and it has a market cap of 180 billion. These guys are at 216. So these guys are just priced too high. If we weigh the value cash flows, weigh that value, it's just I'm not getting there on the stock price, and I'm not getting there by PE because I'm not going to give them 140 PE. No, I can't do it. So overall, I think this stock's priced too high. And again, if they have any kind of sign, because they've shown if they have any kind of sign of weakness, the market will jump out of the stock like it's, jumped into a boiling hot, boiling pot of water. It'll just jump out. And that's my observation of service now. Interesting to see that it's, doing okay now, especially coming out of April. But the future on this one, when are they going to announce their earnings? They're going to announce on July 23rd, so we're 3 weeks away from it. And we'll see what they have to say. They better keep growing. If they don't grow at 20%, they come in with like a 12% growth rate. This one's going to get torched. So let me let you share your technical analysis on service now. You are on the screen. And before you jump in there, let me say hello to Bushy 1147. Good morning, sir. Back to you, Daryl.
Okay. It looks like the technicals are somewhat supporting what you were saying. So they've been trading very flat since May. It looks like the 20-day is declining. So momentum seems to be slowing down. The 50-day and the 200-day are still look to be rising. It's not overbought. The RSI is sitting at 63.2. However, I do see that is on a decline. So that's a little concerning. The
RSI is on a decline.
Yeah, if you look at it, it was peaking back here, and it's lower than it is, or it was at that point. Now it has stayed flat. It's not like it's increasing and this is decreasing. That would be a little bit more concerning. But anyway, the RSI is weaker than it was, although the price has pretty much traded flat. The PPO is in a very similar position, so it's decreasing as well, although the price is staying somewhat flat. So momentum is a whole lot less than it was. It is under some accumulation. The money flow is positive right now, but it's not above 0.05, so it's really somewhat flat at the moment, and has outperformed the SPY, outperformed the XLK, outperformed its industry group, and the industry group is outperforming the SPY as well. This being flat, like you said, is a bit concerning. I think going into the earnings, it doesn't look like it has momentum one way or the other, so it could probably break pretty quickly in either direction.
Mm-hmm. Excellent. So one question kind of out of left field. Super investor activity. Do you ever track who's in a stock or not in a stock from a super investor perspective?
That's not something I look at.
Okay. Sometimes I'm curious because, like, for example, like Citi, Warren Buffett's in it. Qualcomm, a couple of super investors are in it. ServiceNow is owned by Poland Capital, Chase Coleman, but Chase Coleman owns like 100, if not 200 stocks. That guy owns everything. I've noticed that about him. Tory Funds, and they're all reducing. So the activity is where they're selling. They're not buying. So that's interesting to see that you're seeing that the stock doesn't have momentum. You have 3 super investors in the stock, and it's a pretty good sized market cap, right? It's not like flying under the radar anymore. And the activity recently is that super investors are selling. Now let me take a look at Qualcomm real quick, see who's in that stock. So we have 5 super investors, and we have a combination of some investors are buying and some investors are selling. One investor, Viking Global Investors, they added 343%. They bought $220 million of Qualcomm. The
Do
other
you
thing
want to
about
share your
Qualcomm,
screen?
sure, let me do that instead of just talking out loud, huh? So David Tepper is one of the best performing super investors this year, and he was in Qualcomm. Now he's taken his position down. Viking went up a lot. David Katz went up, so that's interesting. And the last one we'll cover just real quick is Citi. And Citi has 8 super investors, and the most super of them all is Warren Buffett. And maybe he sold. Let's take a look. So we have a list of these guys. Now, I don't see any big names, but I could have sworn Warren Buffett was one of them. Let's see if he sold. There it is. So Warren Buffett sold his stock in Q1 of Citi. So he was in the stock, and he reduced it in Q4. But you saw that the stock had done well. Even Michael Burry was in Citi. Man, Citi got some good attention from super investors. So that is in the super investor neck of the woods. So ServiceNow is interesting. It really went up nicely today. And were there any stories? So it's trading below 52-week high. So nothing big. But again, the AI story, I think AI is really interesting, but there's how much hype and how much real value is being delivered, right? And ServiceNow really hyped up, oh, our agents can do all this stuff. And I don't think they have. I don't think customers are getting exactly what they bought. I know that Microsoft, they have their Copilot, and there has been some negative feedback that, hey, this thing isn't doing what it was supposed to do. It's not what the claim was that, hey, the Copilot's going to help people do their jobs faster. It really hasn't done that. Now, most AI engines do add value. Like if you go to Gemini, I think it does a really good job, or ChatGPT. They do a really nice job of getting you information. I get that. But does that make you 10%, more efficient? I don't know, maybe 5%. But it's not like, oh my God, made me 100% more efficient. We can let go of half the people that work here. No, I don't think that's the case. All right, so that is ServiceNow. All right. So before we head anywhere, I wanted to kind of just show you my YouTube channel, and then I wanted Daryl to kind of do the same thing. I wanted to invite everybody to become a paid member. And when you look at the benefits that you get when you become a paid member, you can just join by clicking this join button. You'll get an overview of what you get. Now, part of it is you come on these live streams, you can ask for a ticker to be reviewed. We've had terrific member calls where we dive deep into stocks, and we have calls, conference calls, so we can speak to one another. I think that's a big benefit. We're getting members that are both young and old and in between. And I'm really excited about the young investors, because if you're a young investor and you're watching this live stream, you're following older investors, you're going to be that much better, because you're going to probably learn a few things that are going to be valuable in your investing journey. You're going to make more money over your investing journey. You're probably going to see some stock ideas that are really positive. And when you get to talk to other investors, your learning curve, you climb that learning curve much faster. And with regards to older investors on the member channel, man, they bring it. I mean, I get so much value from my colleagues in the channel, but they too are trying to address, how can I create more income? How can I get better returns on their investments? So please consider being a member. I know I've got several members on the stream. Thanks so much for your support. Let me turn it over to Daryl. I wanted to take a look at his channel. And again, I'd really appreciate if you guys could support his channel by subscribing and then watching his videos.
So I'm an income investor. I don't necessarily invest for growth like many people do. And at least right at this moment, it's because I retired 5 years ago. I don't collect Social Security for another year or so. And in between retiring and Social Security, I need to fill the difference between income and my expenses with income producing stocks. So I tend to be heavily invested in real estate, for instance, and dividend payers and closed end funds. That's what I'm currently heavy invested in. And within the next, when I start taking Social Security, my portfolio will transition a little bit less for income and more to growth, because I won't have to depend on it quite as heavily as I have for the last 5 years. During earnings season is when I'm my busiest. And for every single one of my holdings, I produce videos anywhere in length from 8 minutes to 14 minutes, but I cover technicals just like I have here in this call, and then fundamentals at somewhat of a higher level than what Victor does, because I'm basically looking at the momentum going into the earnings. So I have about 50 holdings altogether. So I produce up to 50 videos, one for each of the companies that I own. It's actually 40, because a lot are ETFs and closed-end funds. So I hold 40. So you'll see approximately 40 of these videos coming out over the next 8 weeks or so.
Excellent. And one thing I want to do again is we had a couple watch parties for some of the big stocks like NVIDIA. I'd love to do that again.
Those are fun.
We'll see which stocks are going to be, real market movers, and we'll do watch parties. So when they announce, Daryl and I will look at the financials that were disclosed and analyze them from the 2 points of view you're observing today. Excellent. Thanks, Daryl. So let's keep it moving on looking at stocks, and this will give you a minute to look at the charts on Reddit, but I'm going to talk about Reddit and kind of see what I think this stock has been doing and where it's going. So Reddit IPO'd, and the IPO market's getting much, much better. We went from a period of time when the government was just fighting every IPO And every merger, it's like, geez, it's horrible. Now IPOs have really become popular. But when Reddit announced or IPO'd, they had a real kind of a drop in their pricing. Let's see if I can show you the level. About a 30% drop, and then the stock really got people's attention, and it went way too high, 344. Well, the market decided, you know what, we're going to discount, the stock substantially, 61% or more. And that's when it really started to catch my attention, right around this era. And I'm glad the market is at times just, irrational, because this is a terrific business. Reddit, I don't think I need to convince many people that Reddit is the real deal. They have a population of users that really love or appreciate the experience on Reddit. And I thought it was a good value, and I started buying in, and the stock's up 80% since that low point. So it's not a matter of, stocks are going to be priced wrong for the next 10 years. No, great businesses, the market will be irrational at times. It'll be irrational when it goes up 344%. That's irrational. This is a young business. Was it worth that much? No. But at the same time, you didn't have to throw it away and put it in the dumpster, because guys like me are going to go jump in that dumpster and pull this sucker out, because it is a good business. Let me show you why it's a good business. Now, I could theorize and kind of go over, this is why I think, it's a great social platform and all that good stuff. But, I want to get down to the cash. I want to get down to the profit. I want to know what kind of cash is going to be loaded up on the balance sheet. When it comes to Reddit, they're already generating free cash flow. For a young business to generate free cash flow, that marks them as a special company. Usually takes companies a long time. And in this case here, Reddit produces free cash flow. They have a very high growth rate, 60%. So I forecasted that they're going to grow cash by 40% the first 4 years, and then 5% in terminal value. They have an excellent balance sheet of almost $2 billion in cash, almost no debt. So I just go 8% discount rate. When I do that, I get an equity value of $33 billion. Right now, their market cap's roughly $29 billion. So there still is a 12% discount, even after we've seen a really nice run up in the stock. The earnings per share are not quite ready to support that stock price. It's actually priced too high if you just look at earnings per share. But I really depend on cash flows more than earnings per share. I actually take 2/3 weight of this number when I do my blended discount. So this stock is nearly at fair price, and I'm buying Reddit. I bought more shares today. It had a tiny pullback, and I said, oh, I'll take it. Boom, added more shares, because I just want to have more shares. I've done really well with Meta, so I'm good buying into Reddit. I think Reddit's going to be worth a lot more. Part of the value of Reddit, before I jump into the fundamentals, let me say hello to Noam. Good to see you, buddy. Thanks for sending your, I think it was windsurfing photos. Those were cool. So the market cap's 29 billion, which is relatively small valuation. Now you are paying 20 times revenue for them, so they better be growing. PE is really high. Again, I acknowledge you can't get to the stock price using PE and earnings per share. Now they are a good growing company, 64%, $1.5 billion in revenue, and it is kite surfing. Thank you, sir. When we look at a company like this, why are these businesses so darn desirable to me? Well, it's because they have gross margins of 90%. And that means that you think about Reddit, what is the service they provide and who's providing it? They have a platform, and people put interesting content on the platform, people being the users, the customer themselves. So it's like customers providing interesting content for other customers. And Reddit, they're not authoring content. They're not creating videos. They're not creating movies. They're not creating media. That's the legacy businesses. These guys are just depending on the users themselves created. So really should, if they can continue to increase the user base engagement, they're going to be a very valuable business. I'm excited about their international growth. That's where I think this business can go up 5x, 10x in stock price, is if they can grow around the world like Meta has. Meta has grown around the world like crazy, and that's what's made them so darn valuable. So the margins are terrific. They're growing into their profitability model. I think they have probably a lot of costs that come with being a publicly traded company and so forth. But as they get bigger, that profitability is going to expand. And then their free cash flow margin is terrific, 21%, and they're a young business. So I really like Reddit. You know what's fun about Reddit is together on streams and in member calls and so forth, we saw this. We were like, okay, it's too expensive. But then once it got into this zone, we were talking, hey, this is a good one. This is a good one. And the chatter started in our channel. And a couple of us bought in. And a couple of us are sitting on really nice gains. So that's really fun, by the way. When we could talk about a stock, see it come down, buy at the right time, it continues to go up. I think the long-term story for Reddit is real positive. This could be a 5-bagger. This could be a 10-bagger. It most definitely can if they continue to grow. So that's Reddit. Daryl, could you give us your observation on technicals for Reddit?
Okay, so this is one I've never looked at before in charts, but it did come off its, what was that, April 7th low, just like everybody else did. Looks like they're up about 102% so far, so that's a really good run since April. They are tracking above their 200, their 20, and their 50, which all look to be increasing, so that's all pretty good news. They are a little overbought at the moment, but like we talked about earlier, this can resolve itself over time. Doesn't necessarily have to come back down to resolve itself. Time can also do that. PPO is looking really strong up and to the right and trading above the signal line. They have a good relative growth in comparison to the SPX.
Mm-hmm.
Accumulation looks like it's been decreasing. So that's always a little concerning if
So
your up
does that tell us
volume.
that there's people taking profits? So there isn't like people hoarding the stock. There are people that are selling the stock.
Yes, it's not being accumulated at the same same volume that it was being accumulated. Like for instance, back here in November, all the way to even March.
That's where we saw that really irrational price increase. It was like, okay, this is kind of nuts, guys. It's a nice business, but it's not worth that price.
Yeah.
Yep.
So then it is outperforming the SPY, outperforming the communications sector, outperforming its industry group, and the industry group slightly outperforming the SPX. It's basically sitting right at the 0 line.
Okay. So Reddit can continue to advance. but it could also give up some of these gains. Either situation is good news. If we were to give up some of these gains, I'm going to buy more shares because I want to have a part of this business. I think the business is a good one. If it keeps going up, then I'm just going to sit back and let it go where it's going to go. They need to continue to grow. These companies, Reddit, as we own these businesses, here's what's important that I suggest we really keep our eye on is the story that's making Reddit valuable is high growth, top line revenue, and that margin rate. You have to keep growing Reddit. If you don't grow, your stock will drop and it'll lose its character or its classification as a growth stock. So I'm stating kind of like the obvious, but you'd be amazed that, some stocks that's ignored. I mean, the perfect example is Tesla. Their car sales are like terrible and investors don't care. They're like, oh, whatever. We think the future is bright just based on what Elon Musk will say. And this one here, they don't have the clout that Elon Musk has, so they won't be able to spin a good story and say, oh, we're not growing because this, that, and the other, but the next couple of years are going to be great. Yeah, they wouldn't get away with that. Their stock price will get destroyed. So we'll see how things play out. Reddit is one of those stocks that I think is terrific. Another stock that maybe, and I'm kind of putting you on the spot, so if you need a minute to get it ready, but can you take a look at OSCR? This one is so volatile. I think it's going to break the technical analysis. Yeah, so if you could take a look at that.
So it is definitely volatile. Yesterday with the CNC pulling their guidance, that hit OSCR and a couple of other healthcare provider stocks yesterday. Look at this volume. Its volume is like 2x what it normally is on a 50-day average. And CNC, if we just went and looked at that real quick, because that was the culprit yesterday. They traded it.
What is CNC? Sorry, CNC.
What's that?
When you say CNC, what is that?
That's Centene. They are the healthcare provider that pulled their guidance yesterday after the Senate bill was passed. And that's what started the whole collapse of the healthcare providers yesterday. That's what drug down all of healthcare yesterday.
Perfect. Keep going.
Okay, so CNC traded 13 times their 50-day average volume. So that's incredible. So if we go back to OSCR, okay, so no surprise, they have a declining RSI. Most of the healthcare providers did yesterday. The PPO did cross below the signal line. That's usually not a terribly good signal, at least in the short term. Accumulation fell yesterday. Money flow fell yesterday. So, I mean, if you're already a holder and you can reduce your cost and it's something that you already understand the company, this is probably not a bad time. But it does look like it's going to struggle, at least in the short term.
Okay. So good stuff. Let me kind of process some of that. So,
so you own OSCR and I own CNC. So, I'm in the same exact position. I'm definitely in the hole at the moment. This is one I've sold a lot of options on, so I'm not nearly in the hole as bad as it would look at first glance.
Mm-hmm.
So I'm going to continue to hold, but I don't see a way out, back to these levels of value or pricing. I don't see this pricing coming back into play for a while.
So let me go over Oscar Health from a fundamental perspective. So Oscar Health, their base business, right? They sell health insurance to individuals and small businesses, and the way they make money is they sell policies at $100, and they don't want them the cost of providing the medical services cannot exceed $100. It has to be lower than that, and they're high cash flow generating companies like United Healthcare, Elevance, and so forth. These guys are just a high growth company. They're very high growth, and they have an addressable market that's massive. So I really like that story. Okay. Now, their cash flow generation is really high. So high that I have to bring it down, kind of tame it. So I'm already bringing down the numbers. So I'm not overly optimistic. And actually bring it down 25% over the next 4 years. If that doesn't happen, it just means the business is worth more. And then terminal value, I'm going to grow by 4%. I know it's riskier stocks because it's small, so I'm discounting by 11% versus 8 that you saw on other stocks. And even when I discount by a very high rate, the present value of these cash flows is $7 billion, but their market cap, and I add cash, which is $3 billion on the balance sheet, only $300 million of debt. So the equity value is $9.7 billion, much higher than the market cap. So the value's there. Now, will they continue to? What's good about being a small business is you have the federal government in the U.S. making these big decisions around the big bill and so forth, and they're going to disrupt, who makes money, who doesn't. But when you're small, you're agile, quick. You can adapt. You can go and, okay, well, if we can make money, doing this other thing or doing it a different way. They're more able to do that versus a big monster company like a United Healthcare. So I think they're going to be able to adapt. And I think they're going to always, for the next year or 2 or 3, they're just going to be discounted. So I'm buying it. This was my biggest purchase yesterday, was Oscar Health, because it has severe volatility. This one is like crazy volatility, but it's still up year to date 22%. So at times, investors really get excited about the stock. And they get excited because of its growth rate. So when we have businesses growing at 54%, and it's already a $10 billion business, and again, if you think about the addressable market, what's addressable market? It's the total potential market you could have. It's a humongous market that they can have. It's a very fractured marketplace. There's no dominant player. And if they become the dominant player, 10x stock, 20x the stock. This is one of the bets that I'm making. And if the market is going to have this type of volatility, it's doing me a giant favor. So long as they continue to grow and execute their business plan, on days like this, I just load up. And I've been loading up on Oscar. I think this one's going to work in the future. And at times, God, some days I've just been, I got to kind of shake my head and go, how can you go up 53% in just 1 week? Or on another occasion, went up 30% in a day. The market just is really crazy sometimes. So we got some comments. Looks like Mike is an investor in healthcare. big time. Good to see you, Mike. And then Noam is on Pfizer. I have seen that Pfizer has been going up, and they could put together a good quarter. Again, back to being a bull on Pfizer. I'm still mad at them for surprising me last quarter, but I'll get over it. If they have a good quarter, I'll get over it. So excellent. So Oscar Health, man, I'd love to wake up 5 years from now and this is a $160 stock. I think that's a possibility. It's also a possibility that it doesn't do that. There's no guarantees. Welcome to stock investing. But I thought that would be interesting. So I'm being called to get to something right away. So I'm going to need to end this stream. It was awesome to stream with you, Daryl. Thanks so much. Let's
Thank
plan
you,
on doing this
Victor.
again. And for sure, kind of get our a good process down so we can have good watch parties for these big earnings that are going to be upon us in like 2-3 weeks. It's going to be hot and heavy. It'd be great to do this on some of the big earnings as well as other live streams. I'd love to do it again.
Okay. Sounds wonderful.
All right, everybody, enjoy your 4th of July here in the United States and enjoy your weekend around the world. Tomorrow's a holiday in the U.S. No stock trading tomorrow, and we'll be back at it on Monday. But thanks so much for tuning in. I really appreciate everybody's attendance and everybody's support. Thank you.